Why are institutions suddenly buying Bitcoin? You see this kind of news coming up everywhere on social media, from big institutions to ETFs from small corporate companies. Why is everyone suddenly buying Bitcoin? Today we're gonna get some deep dive into why businesses are taking advantage of Bitcoin in every aspect of their business, from strategic reserve asset, corporate financial innovation, further adoption, regulations, and as well as the risks. So before we continue, guys, hit the like button and subscribe to the channel. So the first thing I'm going to talk about, guys, is the fact that Bitcoin provides to the companies a way of a strategic reserve asset. And Bitcoin helps companies in two ways as a strategic reserve. Number one, hedge against inflation and diversification. So let's first talk about hedge against inflation. And for that, we have to really get into the understanding of what exactly is inflation and how inflation impacts the company's balance sheet. So pretty much inflation is the increase in prices of assets such as goods and services. You guys probably already know that, but one of the ways that the Fed uses to track inflation is through the core PCE. And summarizing why the Fed cares so much about inflation is simple. If inflation keeps rising, the Fed will try to raise rates in order to hold down inflation and de-escalate economic activity. So in a nutshell, the best way that the Fed has to keep inflation under control is by raising and reducing interest rates. And then you may ask, okay, so what happens if the Fed raise or reduce interest rates? The first ones to be impacted are going to be banks. And the banks will follow along. If they raise interest rates, it is going to be harder for their customers, corporations, individuals, to get a loan and pay back that loan with interest because the rates will be higher. Likewise, if interest rates are lower, it is going to be easier for people and business to invest in their business, hire more people, and keep more money flowing into the economy. And that increase and decrease of interest rates is also reflected on the loans that companies already had from the banks. So if a company got a loan from the bank at a specific interest rate, if that interest rate changes, it is going to be reflected on the liabilities balance sheet side on the long-term debt as a non-current liability. The higher the interest rates, the higher the debt as a liability, which now begs the question, what does Bitcoin has to do with it? And the answer is quite simple. The nature of Bitcoin is deflationary. So while the Fed is trying to fight inflation by raising or reducing interest rates, Bitcoin is deflationary in its own nature. And once Bitcoin is added to the company's balance sheet, it is going to overcome the debt that this company has from the loans that they took from the banks. And where exactly are they going to put Bitcoin on the balance sheet in order to offset the liability? Then comes diversification into play. If you take a look at Ray Dalio, he advises companies to use around, if I remember correctly, I don't know if it's 5% or 15%, but at the beginning, in a really conservative way, even corporations, they can benefit tremendously from just 2% of allocation to Bitcoin. This is exactly what GameStop has been doing over the years. And you can see right here that their total asset has been growing tremendously as time goes by. And Bitcoin is going to be added specifically as a net intangible asset on other intangible category. And as you can see right here, GameStop does not use Bitcoin as the primary business operation. They're just using Bitcoin to offset their already gaming industry operation. And once a company adds Bitcoin to their balance sheet, it is going to be right here in the intangible assets. And that's exactly how it is going to offset the debt that this specifically company took over the years from banks. But it's okay if you don't know how a balance sheet on the company works specifically. I'm going to explain pretty quickly how does this work and why this is good for companies. And this is exactly where corporate financial innovation comes into play. And the first financial innovation way that we're going to notice on companies such as GameStop is going to be on the performance measure. You see, the balance sheet is split across different categories. And those categories are going to help risk managers to evaluate companies' risks, such as the ability of the company to pay its own debt, if that company is financially healthy, if that company is compromised on the long term with their own debt, so on and so forth. And this happens by taking that data from the balance sheet and making some simple calculations. Some of them are liquidity ratio, profitability ratio, so on and so forth. So if you take the liquidity ratio, it's pretty much the ability of the company to generate liquidity. It is going to take current assets and divide by the current liability. If that number is going to be higher, it means that the company is healthy in terms of liquidity. They have more assets, such as current assets. They can quickly generate liquidity in order to cover their current liabilities. This is pretty much the short-term solvency of the company. Then you also have, for example, solvency ratio, such as the total debt by the total assets. And that takes into account everything that the company has as an asset and then offset against their liabilities. And this is exactly how GameStop has become one of the most profitable and liquid companies in the financial markets lately. By adding Bitcoin into their intangible assets, they have increased tremendously the total assets from their balance sheet just because Bitcoin has been valuated and increased in price over the years. And that helps them to be more liquid. And in case they have to quit their debt and generate liquidity, this is exactly how Bitcoin is going to help them. It makes their asset way bigger compared to the liabilities. Everything at the core of Bitcoin by being deflationary. GameStop is just an example. You can take any kind of business for any industry. Just by adding Bitcoin, this company is going to increase its capacity of generating liquidity. And another way that Bitcoin can help companies with their increasing their asset value is by the fact that once you hold Bitcoin in exchanges or cold storage, you can sell that Bitcoin, generate cash, and that cash is going to your current assets. Literally, liquidity on the spot. So as you can see, this is not just about financial innovation. It's actually a hedge, a protection on the company's own balance sheet. Then you're going to take some companies that are going to be Bitcoin native strategies and they're going to the other extreme. As you know, of course, MicroStrategy. In the same way, Bitcoin goes into the same category as a net intangible assets. Oh no, although MicroStrategy is registered as a specific business type, they are at the tip of the spear when it comes to Bitcoin adoption. But still, what happens is that some companies, such as Bitcoin treasury companies, they are also going to be the ones who are going to be native strategies. Not only adding Bitcoin to the balance sheet, some companies already accept crypto as payment gateway. So instead of purely relying on banks and regular credit card for transactions from their customers, they can also use crypto and Bitcoin payment gateways to offer more flexibility to their customers. And this goes also back to the balance sheet. Once company adopts payment gateways as cryptocurrency, they will be adding Bitcoin to their balance sheet straight from their customers, without the need to directly buy Bitcoin on the exchanges. Now, this movement has only started recently, and this is because government and regulation started to take place massively in 2025. You're going to take several government initiatives such as the strategic reserve, which is going to be similar to use Bitcoin as a strategic reserve asset for corporations, but in this case it's going to be for government institutions. You also have many others like the White House Framework, as well as the Genius, Clarity, and Anti-CBDC Acts. This all is going to boost liquidity and adoption not only for cryptocurrency as well as for Bitcoin. From individuals, companies, small businesses, big corporations, funds, hedge funds, ETFs, and as well as governments. And we're also going to have more clarity when it comes to regulation. You're going to see the rise of Bitcoin ETFs coming up. And as you can see right here, the market cap of ETFs has only grown over time and is expected to continue growing over the coming years. By making Bitcoin ETFs more regulated, it raises awareness from potential investors about Bitcoin. Individuals are going to rely on Bitcoin from their banks as well as from other institutions. It is going to be normalized across companies, countries, and banks. And something that is really interesting about Bitcoin and blockchain in general is the fact that it is transparent, which is going to help the regulations when it comes to auditing. We have several blockchain tools and companies that is going to help with the auditing, such as Fidelity, BitGo, and Accredited Digital Bank. And the most cool part about blockchain is the fact that everyone has access to it. You can see transactions going on all the time across different wallets. The best part is that most of them are anonymous, but big institutions and big companies, they actually have their wallets tracked. So that's going to facilitate transparency and trust for the general public, from other companies into crypto and Bitcoin. Now, these are all good news, but we also have to be aware about the risks involved when it comes to Bitcoin adoption by companies. And the first one, and I think is going to be the most tricky one, because we are going to go over that on 2026, is going to be price volatility. Because that adoption took place in 2025, exactly at the third year of the current bull run, where prices are just rising and rising and rising. So everyone is happy about purchasing Bitcoin. But the real stress test is going to be when the bear market starts. We don't know how further the market will go down, and we don't know for how long. Of course, based on previous cycles, it's going to be 1 year, but there's no certainty in the financial markets. And whenever we have to consider about the price volatility, the first thing is going to be the credit structure. If the price goes down, this is going to influence exactly this part of the balance sheet of the intangible assets. By lowering this value, it is also going to lower the asset amount on the balance sheet, which can compromise the long-term liability debt. And that requires what we call margin call. And some companies need to be liquid enough in order to add cash to the banks and to the loans in order to keep their margin. The other factor is going to be the revenue support. If you have Bitcoin native strategies like MicroStrategy, they are going to be the ones who are going to heavily feel the impact of Bitcoin drop in price, because their revenue is strictly related to Bitcoin. So if the price falls 40%, MicroStrategy might get as further as that, maybe even more, which is going to affect the liquidation and profit taking of the company. This is also the fact of market reliance. We don't know for how long a company such as MicroStrategy is going to be able to hold themselves during the bear market. Although some smart investors may see it as an opportunity for buying, as long as we see that the company is long-term sustainable, most part of the investors might get actually panic selling, which is going to drive the price even further down. So for MicroStrategy specifically, that's going to be a real test. And although they hold the premise that they have some management buffer, we only gonna know how this is gonna work on real time. So this is some estimations that I got that we can track when it comes to how much the price can go down if MicroStrategy is going to survive or not. So this is pretty much the current scenario. Bitcoin at 118K, crypto reserve value at 72 billions, liabilities 14 billions, equity buffer 58 billions. So of course right now we can see the risk of bankruptcy is quite low. And as the price goes further down, we can see how is going to be the risk of the company getting bankrupt, of MicroStrategy getting bankrupt. Theoretically, I don't think the price will go further as 75K. I think it will be higher than that, but even though at 50K, this is when things start to get tricky for MicroStrategy. The crypto reserve is going to be at 30,000 billion, liabilities 14 billions, and equity buffer 16 billion. So this is pretty quite close to each other. which is going to compromise the ability of the company to liquidate and quit their debt. So that's possibly a level of refinancing. Of course, this is just estimation. We never know for sure. But ideally, according to the numbers, we can say that although MicroStrategy is a little bit leveraged, they are on a safe spot if price goes down. But my main concern right here, personally, I think is going to be the general investor's mindset. When the crisis hit in, I think most people are going to panic sell MicroStrategy. And that's going to drive their shares much further. Then we're going to see if they are strong enough in order to hold their Bitcoin and keep themselves in the market. Not only that, besides we have the fact that a lot of government adoptions and regulations, we also have to clarify a couple of topics. And due to the fact that Bitcoin price is volatile by its own nature, this is going to affect the company's balance sheet and, of course, CFOs, controllers, and public companies. One of the ways that businesses can help to hedge such risk is by using stablecoins. That is going to prevent a little bit the fall of the company assets from the falling Bitcoin price. The other aspect that businesses are going to be aware of is the tax complexity. Take into effect that crypto and Bitcoin are quite recent, some companies may need further assistance and consulting in order to have their tax well planned for the government. And more adoption also leads to more security concerns. We're talking about big businesses holding a huge amount of Bitcoin, as well as more and more individuals who are now exposed to the crypto market. Something else that is going to be impactful is the fact that the law is not going to be the same everywhere, even within the same country. We know, for example, that in the United States, some states are more Bitcoin adopters compared to others, and that's going to affect businesses in general or those businesses who work in different places. More public adoption also leads to a higher compliance for the general public. Cryptocurrency exchanges are now going to be a little bit more regulated, perhaps with strict security. The same for banks and other types of businesses. The same goes when it comes to small businesses and the fact that they are now holding a financial asset. When it comes to regulation, this might be tricky for some business, so some companies may give up on the adoption because owning crypto assets such as Bitcoin is still not very clear when it comes to their balance sheet.